Welcome to DeepTech315. Our first topic is where we left off on last episode, last Friday, which was talking about DeepSeek. Now the market has known about it, and my years of being around tech, I can't remember quite a reversal as we have seen this week. We just want to kind of paint the picture here. Reminder: Monday, Nasdaq basically was down 3.5% over a few-hour period as talk of DeepSeek, and then since that point, it's come back, and we're essentially at the same point we were during our last episode at the close of last Friday. So we took a drop down. Typically, it takes, Doug, you've gone and done the math on this, 32 calendar days for things to bottom. And then like another, was it 52 trading days to return it. This time we saw the bottom in like 6 hours and the rebound in within 4 days. And is there anything that...
Can I just make that a point clear for the audience? Because that is true. That data actually is about 10% corrections. If you look back at the .com era, when you had a 10% correction, 30 kind of days to get to the bottom and then 50-ish days to get back. This wasn't a 10% correction,
Good
just
point.
to put it into context.
It wasn't
fast.
It wasn't a 10% correction. And at the time, back to Monday, I was thinking we were going to drop, have a slight rally, back up a percent or so, and then kind of capitulation again. And it feels like everyone is in a really good spot where relative to the AI trade, and just fill in the blanks about what happened midweek that have kind of gotten people to a good place.
I mean, it just feels like everybody has sort of come out and defended the realities of the current AI paradigm. You've had Sam Altman with OpenAI talking about the need for compute is as great as ever. Dario Amodei from Anthropic, he put out this long analysis of DeepSeek and more or less said the same thing, right? That, you know, the DeepSeek, I think, takes were probably a little bit overblown. And the reality of needing a lot of compute, a lot of data, that hasn't changed to really be on the frontier edge. And then on top of that, all of the hyperscalers this week have reiterated that they're going to keep spending on CapEx. So I think you've had this kind of broad defense that, yes, DeepSeek has had a few good innovations that will be added into the industry, but this reality of needing really expensive CapEx, a lot of compute to drive the industry forward, that probably hasn't changed.
I'd add another piece to that. The commentary from the mega caps is related to OpenAI raising potentially another 40 billion at basically a 2x markup from where they were back in October. And, you know, to me, that almost felt like equally has having equal weight to what the hyperscalers were saying, that, you know, the private markets are basically shrugging off, if not thinking that DeepSeek may be a catalyst to the broader AI.
That's right. Yeah. I mean, OpenAI, I think the number I last saw was 25 from SoftBank. Maybe that ends up being much higher. And then at a $340 billion valuation. And we were sharing some of the math on that valuation internally. I think it's like that would make OpenAI like the 40th or 50th largest company in the world by market cap, which is just incredible to think about what people are pricing in for the potential of their technology. But obviously, if they raise 25 billion or more, a lot of that is going to go into resources to train their frontier edge models, and they continue to be in the lead. So they obviously think it's going to take a lot more money to get to where they want to go with AGI.
And I think that you know, the conversation that we've been having is just around that training of AI and looking in context to what DeepSeek has done. It's more about what the training is going to be and what's needed to get to the next step forward. And can you tell us a little bit more about that concept?
Absolutely. I mean, I think that's the thing that kind of got missed in the broader DeepSeek conversation is if you just put it into perspective, right? DeepSeek R1, which is the model that came out last week that really, I think, got everybody's imagination going about could this change the way we train models, how we think about the cost to train models. DeepSeek R1 is as performant as, you know, AI models that our American frontier companies have built, you know, several months ago, right? So it's not that DeepSeek came out with a model that was a step above. where we're at. They came out with a
Hmm.
model for, we could debate how much they actually spent on it, but probably a little bit cheaper just to get to current frontier performance. OpenAI and O3, GPT-O3, that I would argue is probably still the leader in terms of advanced reasoning, everything we saw with the AGI Arc Prize. That feels like it's still going to be the best model on the market. That's coming out very soon. GPT-O3 Mini, Sam Altman already said, is going to be coming out soon. And so if DeepSeek had jumped us forward, if it had been a leap
Right.
forward in actual performance, I think that would be one thing. But it's not. I think we're still going to be heavily reliant on our American companies and American infrastructure to keep pushing that frontier edge.
So when we think about like that frontier edge, Trump has come out and said, let's American AI needs to innovate. I think that's good for some of the mega caps, just around regulation, kind of giving them some more room in terms of how they can let these models run. But there's also the piece about making it more difficult for some of these, let's say, DeepSeek, and there'll be a lot of other ones that are coming down the path to be able to distill a model from the likes of Gemini or Grok or GPT. And I'm curious, is that something that's really possible for like them to lock down? I just feel like being out in the market, you're going to get somebody's going to, a distillation, by the way, is effectively ripping off someone's model. And I mean, is there any way to really you can put curbs on the hardware and the sales of different chips, but can you actually put some good safeguards around some of these models to prevent some distillation?
I think it's going to be really hard. I mean, it's a great idea in theory. It's been something that's been percolating, I think, throughout the week, where it seems apparent, to your point, at this point, that DeepSeek did probably a fair or significant amount of distillation to get to where they were at the cost levels that they did. And so it's not like they, built some de novo product, right, completely on their own, like OpenAI, Anthropic, and others are doing. I'm not quite sure how you would really be able to put safeguards around the distillation. I mean, there are things that OpenAI or Anthropic, Google can kind of monitor, right, in terms
Right, if
of just
somebody's doing
query
it, right,
volume,
like an
traffic
alarm
volume.
system kind of a thing.
Yeah, and maybe they can cut off certain sources that maybe appear to be
Right.
abusing their
Yeah, there's probably
system.
some
Obviously,
behavior around it.
I think it's just going to be hard because you could have, if you're DeepSeek, right, instead of just doing it with one or two IP addresses, maybe you spread out the traffic that you use to kind of perform the distillation process. So I hope that we can find ways to slow that down from a competitive standpoint, but I also think in some ways it's kind of a reality of the market.
Let's jump to our second topic, which was Tesla earnings. And this threw me for a curveball. If you would have given me the press release and asked me what the stock is going to do, I would have said probably down 5 or 10%. I think it closed up a couple percent and then has kind of moved up a couple percent since then. So by my math, I'm off by like 15% over a course of 2 days. The reason why I thought it would be challenging is, of course, the automotive gross margins ex credits. It basically hit a 5-year low, was 13.5%, like materially missed where the street was at. They also pulled the guidance that Elon had given in terms of deliveries of 20 to 30% growth. The street didn't really take the bait 3 months ago. They were at 14%. But all they added was that the automotive segment, they didn't say deliveries, but the automotive segment would be up year over year. You got to kind of figure that probably means something like to expect 5 or ish percent growth. Still well below where the street is at. And the CFO also talked about this pivotal year that there's going to be this is going to be an investment year, which basically says don't expect any sort of big upside to margins in 25. But of course, anybody who's been following Tesla knows this. This was like buzzword bingo of positive words. Ballistic, bananas, epic. There's one that I'm forgetting, but he essentially, the way I described it, is took the bar to the floor for 2025 and took 26, 27, and 8 to the stars. And I'm just like curious. I think this is the reaction is just confirmation that Tesla shares trade on emotion. At least they are trading on emotion today. Would you agree with that?
Yeah, I don't know how else you could say it. I think you said it perfectly, right? I mean, this is one of the weirdest instances of what would you have thought the stock would do
Right.
given the numbers relative to what it actually did, given the numbers that I can remember for a long time? I mean, go back to 2020, 2021. Not saying we're back in that environment yet, but certainly like the imagination that's been captured around the potential for robotaxi, unsupervised FSD, right? Hopefully that does come this year as a consumer. I think that'd be great to have it in the market. Optimus still as a potential, all those things are still out there, and none of that really seemed to change other than, to your point, right? The deliveries for this year are probably tracking healthily lower than where they thought they would have when they gave that guidance before.
So when I was looking at my scorecard in terms of how Elon was talking about different opportunities, he was kind of equally a little bit more heavy on autonomy. They said that they're going to expect some states to have FSD be fully available by the end of the year. And of course, they talked about the cyber taxi starting in Austin. He referred to this as dipping a toe into the water. Translation is they're probably not going to have very many out in the wild. But either way, they're getting moving on, at least understanding the payment side of things. But the piece that really stood out in terms of all the language and his optimism was Optimus. And, we've talked with people who are close to Tesla. It's, I would say, over the last 6 months. And they've kind of warned us, like, this is really exciting, but don't get ahead of yourselves. I mean, this is coming from what I think people who generally orbit that world. And then kind of compare that to some of his comments. And he's talking about customer deliveries of Optimus by the end of 2026. And I'm going to take the over on that, and which is pretty easy to do, but I'll take the over and I'll say 2028. And I just want to remind / caution investors. I own Tesla personally, but just want to remind how this is going to take probably a little bit more time. And by the way, that orbit that I talked about that is referenced, this timing of this is equally as positive as Elon on the long-term potential of what Optimus can be, specifically accounting for more than half of the company's value. And Doug, we've debated Optimus in the past, and I haven't asked you after this last quarter just where you're standing on Optimus.
I mean, I think the potential is incredible. I think the timeline is probably longer than Tesla shareholders would probably hope, to the point you just made. I mean, Elon kind of even joked about the boy crying wolf, if I remember. I don't remember exactly what he said in the call, but it's like, there's a wolf right in front of us right now, as it relates to, I think, FSD.
In an FSD, in a self-driving car, I think.
Yeah. And so, I mean, I think, Optimus might end up being the same thing. If it meets its potential, it's incredible. I think just, the timeline to that being an actual reality is probably longer than we want.
Man, I just love the flow of their calls, the casual nature of it. They're quite entertaining. Even if you don't like the stock, you got to listen to the calls. It's pretty fun. Last topic is Apple. Very different approach to their calls. I would consider them, if Tesla was a raging frat party, I would say it's probably like a meeting of actuaries on Apple's call. And the bottom line here is they beat the numbers, revenue up 4%, but that wasn't the headline. It was the iPhone dipped down. And I'm just going to boil all of this down to the most basic level. I think that there is something going in a wrong direction in China. It's not about China macro. I think the Chinese consumer is starting to move in a different direction. We saw it with some of Samsung's results. It's 17% of their revenue. This is more geopolitical related. China can have an influence and promote more patriotic buying. And I think you're seeing that. Huawei up about 15% in the quarter. But I still remain optimistic that despite some of the headwinds in China, and despite what I think has been kind of watered down Apple Intelligence so far, that this ultimately is going to deliver the punch where people do recommend it to friends, and it does go out to impact iPhone sales. This year, the street's now looking for 3% iPhone growth. This is for fiscal 25, bumping up to 8 for next year. So I think that's kind of consensus, is that 2026 is going to be the year where Apple Intelligence has a more impactful impact on revenue. I'm going to give you a last word on this, Doug. My money is on that it will, in fact, drive. Simple question. The bogey's at 3% this year, 8 next year. Do you want to take the over in line or under on that 8%?
I think it depends on what they announce at WWDC and in terms of what they put into iPhone 17. I think
Right.
the
Could be a thinner
biggest
phone, could be
upside
more
case,
attractive.
yeah, but I think the biggest upside case is if next year, if they start talking about iPhones that are maybe doing AI on the edge, um, maybe that gets consumers really excited. Now, I don't know if the average consumer knows what doing AI on your device means or even cares, but I do think there's something there in terms of how do you think about a super cycle upgrade? That might be the catalyst for it, is if you actually start, whether it's DeepSeek or something else that pushes us in that direction, doing it on the device on the edge, that could push it much higher than 8%.
That's a well thought. I know you didn't know that question was coming, but it makes a ton of sense that it's really about when you have a lot of blanks to still fill in to determine how that 8% number looks. I'll still take the over. On behalf of DeepTech315, bye for now.